All right, we up in it. Let's go. We got a few things to talk about. Already got a watch list ready for tomorrow, and there's a lot of news going on. So, with that being said, we're gonna get into it. Thank you everybody for joining. We're gonna take a couple seconds in case anybody wants to join the live. Um, if you're new to trading and you have questions, feel free to ask. I have no problem doing separate videos for specific things. Whether you guys are trying to figure out your RSI, trying to figure out VWAP, trying to figure out moving averages, whatever it may be, I have no problem making videos separately. And just so we can go through that right now, really quick. So VWAP is this light is this white line right here, and this shows the volume weighted average price. So the price is weighted and figured out by how much activity is going on, and this shows you the level and price that the stock should stay about. You see how the white line is moving through these? That means the stock is being valued at that easily, right? Honestly, I probably should prepare to do a better explainer and teaching video because I learned what VWAP was like 4 years ago, and now I understand how to use it. I don't understand how to explain it the best. But this blue line and this pink line are moving averages. So this line shows you the average price of the stock over the course of 250 days. And then this one shows you the average price over 20 days. The color pink and blue, it's just that color because it helps me see it easily, but it doesn't matter what color it is, it denotes the same thing. We could choose any of these colors. And so right now I have the moving average for the day, I have the moving average for 250 days, and I have the moving average for 20 days. And I have VWAP. And that's pretty much, these three lines is pretty much all I use to trade outside of candles. I look, you see how the candles are sitting right on top of this line. I would look for one of these candles to break that line, and then I would see what happens if it could touch this line. Because if it touches this line, one of two things is going to happen. You see how it hit 1, 2, 3, 4. We got like 6 candles here. So actually, really, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, over 10 candles right here on this line, right? So that means these levels are where the stock likes to stay at. So for this, I would be looking to see if we break this line. If we break the pink line, that means we can go down to the blue line. And once we hit the blue line, one of two things is going to happen. We're either going to bounce off of it and come back up to the pink line, or we're going to continue down. And that's why I have this blue line right here. Because if the stock goes to this blue line, now I'm worried or I'm prepared, depending on if I wanted it to go up or go down. If I wanted the stock to go up all this way down here, I don't care. This is the range. As soon as it hits this blue line, okay, now I'm a little worried. If it falls through the blue line, I'm no longer looking for it to go up and I'm out of all my calls. But I could buy a put and look for it to go down to the blue line. Once it hits the blue line, I could be risky and see if it'll touch the other blue line, or I could take my money right here or in between this. And so these are the moving averages, and you want the stock to either sit on or stay above the moving average if you're looking for it to go up. If you're looking to buy a call, you want this line to be supporting the candles that you're looking at. And what I mean by supporting the candles that you're looking at is you want the body. This line right here is called a wick. The ends of the candles have wicks. I want the blue line to be touching the body of the candles and sit above it. So this is sitting above it cleanly. This is sitting above it cleanly. This is still sitting above it cleanly. Right here, we started to break the blue line. Now my blinkers is going off. What's about to happen? And then here we hit it again. We hit it again. We hit it again. We hit it again. And then we broke through it, and we continued to break through it until it went from 716 to 705. That's a $10 break. And once it started touching this line, I'm prepared for it to go to this line. Once it breaks this line, I'm prepared for it to go as far down as the next blue line. And so pretty much the moving averages, you want the candles to sit on the moving averages. And I'll just leave it there. And if it breaks the moving average, you want to look for your next price level. These two dark blue lines are indicating my price levels. The price levels are where I see the stock going in price value, at least for the moment. That's not what I'm saying. The price of it is. That's not where I'm saying I want it to go. For a ticker like QQQ, there is no I want. I don't care what happens with QQQ. It's a whole group of stocks. I care about certain companies independently because I like them. Tesla, I'd love to see Tesla go back to 420 because I like Tesla. Apple, I like Apple. I would love to see Apple go back to 300, 320 because I like Apple. Nvda, the company makes sense. It does a lot in technology. It does a lot with AI. It makes sense. I love computers. I love AI. I would love to see Nvidia go up. But ETF, QQQ, SPX, SPY, I would actually love to see all of those go down because they make me nervous with how high they are in this economy, in this political environment. But we'll leave that there. If you know, you fucking know. So let's get into this. Right now, we're tapping in to review the market, get ready for tomorrow. Today is one of those days where the market gave buyers room. The NASDAQ led, tech names were bouncing, SPY, QQQ, and even Tesla. I just say that because I sold out too early. But we have some ETFs pushing higher like SPY, QQQ. They're showing strength. The Dow closed over $5,200 for the first time ever. So we're green in the market right now. But what you need to understand is that today is a bounce day and tomorrow could very well be red, or it could be a continuation of what's already happening because we've been overextended in the market for a while. So for me personally, every stock that's down a little bit, let's just go through a couple. Like QQQ is technically down from the last couple of days, but if we look at QQQ for the last couple of months, it's still way the fuck up. All of these are way up. AMD, it's way up, right? And so everything that's going down in the market, it doesn't even scare me. I kind of like it because we needed it. The only questions that I have is what are the levels for today? Because I'm trying to get in and I'm trying to get out. But outside of that, I think that we need all of these stocks to come down. Like, I don't even want to put a number on it. But if you look at this, you see the trend and trajectory was steady but uphill. And then 2020 happened and the stock started moving as much as it did in 1 year in a couple of months. And they've been on that trajectory since 2020. So I'm scared of the market. I'm not going to lie. We just been having all-time high after all-time high after all-time high across the stock market, bro. And that makes me happy for red days and makes me wary for very green days where we have instances where the Dow is closing at an all-time high while we're in the middle of conflict with the Middle East. We're in the middle of figuring out the AI and chips and technology. We're in the middle of arguing over oil. Like there's so much going on. Seeing all these stocks go up makes me question a lot of stuff. So all that's here and there don't really matter. It's just my take on things. But we had a green day. I'm gonna look for a green day tomorrow. I'm not expecting one, but I'm also not expecting a red day. I'm going to prepare for it. I prepare for the upside, I prepare for the downside, and I just try to catch the momentum and the volatility in between. I'm a volume trader. I'm a volatility trader. I like to scalp. I get in, I get out. I chart as if I was a regular long-term investor or a swing trader, but I make plays like a scalper. So the main thing I want you to understand is trade at your own risk. I traded for about 2 hours a day. I came up $186. My goal was $200. Originally, I had ended the day at 190. I decided to take a wild Tesla call. It was very cheap. I lost $4 on it after losing more than $4. It was fluctuating. And then I just decided to sell out. At the end of the day, that same contract would have done over 100%. I could have ended the day up $250, right? But the goal was 200. That's my goal for every day for the rest of this week, $200 a day. And with my account, I'm trading $1,000 account, and I'm taking plays that are $250 or less. And if I take multiple $250 plays, that means I only have 4 plays. My goal is to trade 3 plays in a day and make $200. That's the secondary goal. Main goal is $200 in a day. So I was almost there with my 186. I gave a couple of bucks back. I'm not mad at it because the bigger lesson is discipline, as it always should be. And I don't need to overtrade. Don't force trades. Don't do random plays. Just lock in the profit. If you green, go. My main rule of thumb is if you're up 30%, just sell out unless you know for a fact that you're very, very right. And we don't know shit because this market is very, very volatile. So let's talk about what actually happened today. We had QQQ, which took off. It was a leader in the market, which is cool because it kind of shows us what the rest of the area and technology is doing and the rest of the companies in technology is doing. So we opened red and we closed mad green. We had a what? 713. We had a 10 point, 11 point move on QQQ. And right here, we're looking at the hour. So only 1 hour out of the whole market showed any downside. We were green the rest of the day. So let's just go ahead and break this down really quick. Really, it's not even really that much to break down. It was a pretty clean move. So we opened to the downside. We broke the blue line. It quickly reclaimed it. So this is the 1 minute chart. So we're looking at everything that happened within a minute's worth of time. So the other thing that's crazy on this is that it broke all the way down once it hit 419. But it makes sense because you got to think like this. If you bought this right here at 713 and you rode it up to 716, that's $3. Of course, you had big sell-offs. People wanted to take profit. And then you ride it back up from 713 to 718. And then, of course, you have big sell-offs because everybody wants to take profit again. But now that 713 level is the level that I'm looking for. QQQ likes 713. So this right here is the only thing that catches me off guard because it broke through 713 hella hard. And then it went back up. And I'm going to guess that part of the reason it broke right here is because Trump was speaking. I don't know that for a fact that this was the time it was, but I know he spoke today. He said a couple of things. And usually when he speaks, the market reacts and fluctuates. And then he probably said something good and it turned it back up in an uptrend. But this is what I care about. It went back to the 713 level. And then it went back to my line right here in 1, 2, 3, 4, 5 candles. So this is today. All these levels have already been here. I'm not even charting what happened today. I'm looking at the past and seeing how today followed the pattern of the past. So we bounced off that level. We bounced off that level. We broke through this level. We broke through that level. We couldn't continue. We fell. We bounced off that level. We broke through after 3 tries and bounced through that level. 3 more tries. We broke through that level. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles could not make it past this level. And so it broke all the way back down. What caused that breakdown and this bounce up, I can't tell you because I wasn't watching. All I can see is that there was a big ass green candle here with a lot of volume. So once it hit this price, a lot of people said, I think you can go back up. That's all I could say right there. And so we went back to 713. People got that recovery. They sold out. And then we continued for the rest of the day. We broke this level again for the what? 1, 2, 3, 4th time today. And we never came back. So we hit this level again a couple of times, a couple of times, a couple of times. And then we had a little W. That little W took us into a rocket. And then it hit 1, 2, 7 times at least across this level before it went to the next level. And these lines are fairly close together. But as you see, after it broke this level, boom, support, 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 support. So both of these levels are valid. The 718.47 and the 718.93. They're very close together, but that means that once the stock gets to this price range, people are aware of the fact that it has a hard time breaking those ranges. But once it did, again, we just continued straight up, straight up. And so with that being said, tomorrow I'm going to see if this forward momentum carries through, because like I said, all those levels we looked at on the 1 minute have already been there. So if I look at all these levels here that is hit, QQQ can go to 742. QQQ can go to 740. It can go to 736. And we've seen today it went up 10 points, right? And so this box right here shows a range that has been moving within, and then it broke. And it broke that range in one candle. So this is what we would call a gap. And one rule of thumb is every gap has to close. And so when this gap closes, that means QQQ is going to reclaim all of these levels: 725, 730, and 735 back to 736. And so with that information, I'm going to be looking for it to continue from 723.24 to 725. Was it 725.90? And if we can break 725.90, I'm now looking for 730 and then 735. And so some things to look for QQQ to be able to do that tomorrow. We're going to look for good chip news. We're going to look for oil prices. We're going to see what's going on with names like Nvda, SpaceX. My favorite is the S&P and the SPY. So let's just go ahead and talk about that after we talk about Nvda. Nvda, we had fireworks. There you go. Hey, that's how you know that's funny. The fireworks going off outside as we talking about something that had a nice little blast off today. And so Nvda, like QQQ, can move a lot in one day. As you see, we broke as low as 189 and then we finished at 194. So that right there is a $5 move. And Nvda can move $10, $20, $30 in a day when it really wants to. And so with the fact that we went green on the day, I'm going to see if this momentum can carry forward. And you can see right here, even in post market, that we hit $195. I feel like I should close that window. And so again, we have this range. It opened up outside the range. It came all the way down to this 192 level and came back up almost to the 195. All right, this is the 10-minute chart. And so within 10 minutes, it broke two ranges and then reclaimed that same range right here in the second minute and bounced right here, boom. And then you see it couldn't get to that line. It broke through the line and then it fell. And then it broke through the line and then it fell. And then it tried to get back up and it fell again. And then it tried to get back up. So right here is 10, 20, 30, 40, 50. This is an hour worth of clean movement, or you could have gotten in on the downside on either this break, or this break, and still made money without even having to take a 198 put. You could have took a 191 put, a 192 put. You feel me? And then once it did reclaim this, I'm not gonna lie, if I had been watching this closer today, I would have been a little scared to take this to this, just because of how much downside we had already seen. So I would have waited for it to break through this 193 level and see if it could go any further. But we're not talking about today. We're going to look at this for tomorrow. And so let's see what I like about Nvda for tomorrow. Oh yeah, and if you look at it, you can draw a little trend line. And you can see 196. Where'd the day end? 12:15. So we ended around here. Very interesting. I say very interesting because of the fact these broke through that so heavy. Boom. And so all of this was it just testing ranges and coiling. And so with it coiling like that, I'm gonna look for it to keep breaking out, especially because it did continue to go up into after hours, but that's after hours. So I want to see if it holds the price in after hours and post market into the market open tomorrow. So like all this right here is hours closed, including this right here. So right now in after hours, we're looking at 195.15. And so I know that if we can continue from 195.15 and hold, the next level I'm going to be looking at based on today is this red line right here at 196.14. That's my next level. If we could break 196.14, I will buy a call. I'm also going to place an alert. So if it rises above 194, then I'm buying calls. And then I'm going to try and ride from 196 to 200. And then from there, I'm going to be looking for 201. And so when I'm watching QQQ, I'm also watching the SPY. And so actually, let me see something. Yeah, their chart looks pretty similar. Like look at it from here to here, and you have the same shape essentially. That's very close to the same shape in my opinion, especially right here. That's the same thing. You feel me? And so with the SPY right now, after hours is trading right in between range at almost 740. Well, it is 741 after hours. So 741, the next level up is 742. If we could clear that 742, we're going to 744. With the fact that QQQ was moving cleanly and green, I'm going to be looking for the SPY to be doing the same thing. And let's just see what the SPY did. Let me look at the 15. So on the 15, we opened up and it continued. Well, it opened up, broke down. That's the same thing QQQ did. Opened up, broke down, and then went back up. SPY, same thing. Same exact candles, red, 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 red. You feel me? And so if you do one thing on the SPY, you can do the same thing on QQQ a lot of the time. If you do one thing on QQQ, you can do the same thing on the SPY a lot of the time. And so again, like I said, I'm going to be looking to see if QQQ and Nvidia can maintain this green momentum into tomorrow. And if they do, I'm going to be taking calls on the SPY. And so let's look at this on the day chart. All right, now the day chart, the 1 minute. So we broke down, came up, down. All of this, I'm not even going to recount it. We did a lot of dancing. Same thing that happened on QQQ. Broke all the way down, boom, 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 came right back up. And so this is where I was at earlier. I seen it was making this little flag. This is considered a bear flag, or not a bear flag, a bullish flag. And so a bullish flag means you can expect more upside. I drew this and I knew, you feel me? And then what happened? It broke out of it and it continued to the upside. You feel me? That's literally textbook trading right here. All of this was shit. This right here was a clear pattern, a clear trend, especially because it had already broke this level. It broke all these lows and then it came back and it reclaimed it. So once it reclaimed it, it was just a matter of time, right? And then it played within that range. It broke out of it. And so now the range for tomorrow, I'll be looking to see if it can maintain these levels without breaking back down. And honestly, I don't even need that one. I'm gonna leave it because SPY doesn't always move 4, 5, 3 like whole dollars. Sometimes the SPY only moves $1.70, stuff like that. And so you can see that VWAP and all the moving averages are right here. So this is the average price that the stock is at, and it's supported by all of the EMAs, which are moving averages. So we have three different things telling us that the price that the stock is at on the 1 minute makes sense. And then right here, we have everything above the 250-day moving average. It's above VWAP and it's above the 20-day moving average. With that being said, that means the price makes sense and there's a lot of people who support it. So you can expect that 740, 741 is a range that you'll probably stay in. And if we do break through one of these, if we break through the pink one, same thing as on QQQ. If we break through this pink one, I'm going to be looking for it to touch this blue line and then touch this blue line. If it can touch both these blue lines, it could touch the third blue line. It's really that simple, bro. Like, it's really that simple. This looks complicated, but once you understand just how to chart levels and then you understand what these lines do, it makes it so much more simple and the guessing work comes out of it. And so I have QQQ on the upside going 742, 744, 746. On the downside, we got 738. If we break 738, we're going to 735, 733, and then 732. Let's see. Let's go. Oh, SPX. I'm also going to be watching SPX. This was my baby for a minute. I used to tag this every day around 11 o'clock for $100, $150 like clockwork. And really, I was just riding the volatility. I had no reason for what I thought was going to happen other than looking at the red candles and the green candles on the 1 minute chart and seeing if there was more red or more green. And if it was more red or if it was more of one color, I would just hope that it continued in that direction for a minute or 30 seconds. Because you can make 150, 250, 500. You can make money off the S&P or SPX really fast. It is S&P 500. You can make or lose a lot of money really fast with this thing. And so again, today I drew this right here during the middle of the day. It was 1140, 1150 when I drew this. And what I knew is that if we broke out of this triangle to the downside, we could get a little bit more downside, right? And 74.09 to 74.06. So we got about a $3 move once it broke this triangle. But we also had the 20-day moving average right underneath that. So as soon as it broke the moving average, it reclaimed it very hard. And so watching these triangles, you know, one of two things is going to happen. Usually if it breaks out this triangle, it's going to break down to the next moving average, which it did, right? It just so happens that the moving average was also close to the price. So we didn't get that big of a move. So once you see it break past this triangle again, you know that it's probably going to keep going up, which it did, right? And so with the fact that SPY was green, QQQ was green, Nvda was green, Tesla was green, Broadcom is green, I'm going to be looking for a continuation on the S&P 500. I'm going to be looking for a continuation on the SPY. I'm going to be looking for a continuation on QQQ. All three of these are heavily moved by the same companies. So if 5 of these companies, 10 of these companies have good days, these ETFs are going to have good days. If you look here, we were really green today. Palantir, green. Baidu, green. eBay, green. Robinhood, green. Moomoo, what we're trading on right now, green. Intel, green. The bank, green. You feel me? There's some red, Apple, red, but there's more green on my watch list than there is red, and I mainly only watch big cap companies. And so that means that these are companies with a lot of money, a lot of investors, a lot of volatility, and all of them were green today. So we're either going to have a continuation or a fucking rug pull. And I feel as if we should know within the first 15 minutes to an hour. So my first 15 minutes, I'm just going to be looking to look at the trajectory, the volume of the market. Where's the volatility? The next 30 minutes, I'm going to try and capitalize off of what I see in the first 15 minutes. And then I'm going to wait. As simple as that. Because you see today, we broke out and then we went all the way down and then we started breaking back out. We broke down a little bit before we skyrocketed, right? So if I would have just believed the first 10 minutes of the market, I mean, I guess I would have been right because it would have continued to go up. But in between that 10 minutes, I would have felt sick to my stomach holding one position and watching it go all the way down like this. And then ultimately, it would have been okay. So instead of getting caught in my emotions between these breakdowns and these chops, I'm going to buy in and sell out within 10 minutes. Because if you look right here, this was a buy. Well, actually, I wouldn't have bought there. It wouldn't have made sense. It would have been no reason to do it outside of I want to buy this. You feel me? So these three candles, after seeing these three candles, I would have felt confident in buying and I would have bought these two candles. As this one was breaking down, I would have been trying to sell out, right? With this right here, this little doji, two dojis, and this one's more to the upside, almost a hammer. I'm looking for more green. Boom, boom. I'm selling out right here. And that's only if I see these candles forming in real time. But I would have been in and out at least twice within the first 10 minutes of the market. Actually, I can't even say I would have been. I was. I was. This is where I made the majority of my money today. I made $135 off of trading the S&P 500. And it took me about 10 minutes. And so, like I was saying, for tomorrow, I'm going to be looking for the continuation. And I'm going to look and see how it opened up. Hopefully, it opens up. If it opens down, I'm going to see if it can open down past this pink line. Because if it breaks that pink line, the next level I'm looking at, you already know, is this blue line. If it breaks the pink, the blue is coming down to the white, right? So if we break 74.35, we're going to 74.27. And actually, I'm going to put buy puts right here. Because if we break that 7427, I believe we're going back to 7400 or at least 7410. If you look right here, we got 7410 as a level of support for all of these candles and all of these candles. And so I had somebody asking to like get insight on how I chart. You see how quickly I place that line? Because all I'm doing is looking for clusters. And so right here, I see a bunch of wicks and I don't see anything above it. So that lets me know all of these candles in this cluster were bouncing off of this level. And then after that, I'll zoom in and I'll adjust it if need be. But where I dropped it at is pretty damn near close. So I'll move it up right there. You feel me? And so that level is 7410. That's support and resistance. It's resistance because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles in a row could not break this line. So we call that resistance. But then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, like 30 candles stayed above that line. So now it's support. You feel me? And then even once it broke it again, what did it immediately do? Instead of doing a long candle like that and dropping all the way down to here and matching these, it stayed relatively short and it boom, touched it again, boom, touched it again. And then it bounced off of it and continued to bounce off of it until the end of the day. And so I'm going to use this blue line for an indication of whether or not we have support to continue up or we're going to start breaking down. And then I'm going to go ahead and draw a couple more levels of support. And so again, I put this here because I'm looking at these two candles, but then I looked over, I saw that candle, I saw this wick, I saw that wick, and then I seen these two candles right here. You feel me? So that lets me know that all these candles had a hard time falling through and breaking above. That's support and resistance. And then right here, again, we broke above this twice and fell, and we couldn't get above it. And then we broke above it again after trying, and we fell again, and we couldn't get above it. And then we broke above it, and then we came back down and almost touched it. So this is my new level of support and resistance on the stock. And if you look, you can see that it chopped within that. Same thing right here. It was right in between it. And then this right here, boom, it just had a big break and then started chopping. So this right here is the whole level. If I wanted to, I could put one right here. But realistically, for the way I trade, I'm looking for it to break this whole bitch if it break that part. You feel me? Because if it breaks this moving average, it's continuing down to this level. I don't care. And then if it touches this moving average and goes down, 9 times out of 10 is going to come down further. So it all just depends on app open if we could hold this pink line. And then here you can see it on a more zoomed out time frame. And so I do have this gap right here that does want to fill, but with the whole market going green, I don't think it's going to happen tomorrow. It might happen Thursday. And so yeah, no, I don't know. I'm like I said, I'm waiting for volatility. I'm just waiting for volatility. And I say that before I make a prediction to upside, downside, or listing any prices because I don't like to say I don't know, especially in the market that we've been trading in for the last 4 years. Every day is a surprise, bro. And so all you can do is be aware of the outcomes and make the most informed decision that you can. And so before I get into more stocks, I just want to say we do have a lot of geopolitical stuff going on. I already mentioned that once. And with that being said, people are always worried about whether or not we're actually going to get into battle. We're going to be depleting resources, all that good stuff, where we're going to have to reallocate funds. If we do go to battle, we're going to have to reallocate oil. You feel me? So all of that makes the market. When I say the market, I'm not talking about stocks. I'm talking about everything we buy: food, gas, clothing, lumber, all of that is going to fluctuate depending on whether or not we can get this geopolitical stuff figured out, bro. Because countries don't like arguing, and the stock market is an international fund. And so if nations are fighting with each other, they're not going to be investing into each other at the same time. Like, I'm not going to give you money to fund your military and fight me. I'm going to take all my money out of your economy. It doesn't matter. It doesn't matter. Just know that while all of this stuff is going on, in the back and forth stuff with the Strait of Hormuz is going to be affecting the market, is going to be affecting oil, is going to be affecting the psychology of big traders and big companies, because oil is a lot of money. So if their money messes up, they have to figure out how to reallocate and restructure things so that their balances don't get messed up, right? So we're going to be looking for the continuation in tech names, but we're also not going to act unaware of the climate that we're in and know that anything can change at any given minute. Just earlier today, SMCI had some headlines talking about their factories being raided and possibly them creating things they don't have the right to, which means the company that does will react and will retaliate, which is not good for chips in general. And it's definitely not good for SMCI with the fact that they're a big market mover. I'll keep my eye on them. Yeah, I was gonna say that's the type of headline that can create a lot of volatility because it's not something you want to chase, but it's something that people are going to react to because it's technically bad news. So if you're a long-term investor in that company, you're probably going to be selling out. And if you're selling out, you're probably going to be affecting the put market. If you're looking for puts, SMCI, tomorrow might be your time. right? I have it on my list. We can go through that, but it's not something I'm too worried about. My number one is QQQ, and then SPX, and then SPY. Those are my top three, just because they all correlate. And after seeing the direction that they go, you can look for other companies that comprise them, like Tesla and Nvda, and see what direction they go. Oh, Nike also has earnings, and with their earnings, I'm expecting a beat. I believe I saw somewhere has an estimated 8% beat on revenue, and so one thing to be cautious of is that a lot of people already were aware of the fact earnings were happening on this week, so they would have been buying in and pricing in already. With that being said, I still expect late people like me. I didn't realize until Saturday, Sunday night to still want to get in and to ride some of the volatility and the hype. So you could possibly catch me taking some Nike calls, $41 calls, $42 calls, somewhere around there. But earnings is announced after hours tomorrow. So don't get caught holding the bag. That's all I'm gonna say. If you make some money off of a call or a put tomorrow, don't get caught holding the bag. And so I had some good trades today. Like I said, I took option on SPX. Can I show you my contract still? All right, this doesn't show. Oh, yes, it does right here. So this was just a small pop. Oh yeah, that was tiny. So this was oh okay. This is not the SPX. This is SPY. I don't feel like doing this on here right now. I trade on my phone more than I do on my computer. I chart on the computer. I don't look at my options chain on the computer. It overwhelms me. I'm not gonna lie. And it's crazy. I say that overwhelms me when I could look at all of this on here and I'm completely fine. But yeah, I'll go through my trades one by one another time. I showed y'all the P&L, and if you go look at my Instagram, you can see where I cashed out my earnings today. So you know I'm not BSing you. And if you have any questions, you want to know anything specifically, feel free to ask. Drop a comment on the video. I have no problem teaching anything for real, anything that I've learned. Takes a little bit of time to be able to talk this freely about this stuff, but I promise you, a month, 2 months worth of studying, it'll start to make sense. And once you start making money doing it, you'll want to stay. Wait, what is this right here? All right, so we might have just found something. You see how we hit this height and then we fell down, and then we hit this height again, and then we fell down to a similar level? That kind of shows me that we might possibly have some momentum. And this right here is a W. So yeah, I'm definitely going to be looking for a continuation on SPX. And that's another reason for looking at the market on different time frames, because I didn't see that before. And it's right here too, but I just hadn't noticed it. Oh, with that being said, I'll go ahead and show you guys my trading cheat sheet for tomorrow. And I'm gonna get on off of here and wind down for the night. So this is what I'm going to be looking at. This is what I'm going to be looking for. Well, first, I'm looking at QQQ to see what's going on, see what our direction is. Then I'm going to be looking at SPY to see if that and QQQ are playing nice. And then I'm going to go look at the S&P 500. The only reason it's at the bottom is because this is the most expensive thing that I look at on a regular basis. And sometimes it's just not worth the risk. So unless these two give me confluence that they're doing the same thing, I might hesitate on SPX. And then next, I'm going to be looking at Nvda, especially with the news about SMCI. And then I'm going to be looking at Amazon and Apple. Really, I'm going to look at QQQ, SPY, and S&P 500, and then Nvidia, Apple, and Tesla, and then everything else. I'm not even going to lie to you. And it's just because I like these the most, and I've traded them the most over the course of the last 5 years. Like SPY was the first thing that I ever learned how to trade. Next, I started playing around with QQQ, and that's what really made me realize there was money in this. I took like 3 or 4 contracts on QQQ, like $75. So I probably spent like $300. I forgot I did it. I hadn't been trading for a while. I was at work. I was on the clock, and I kid you not, I was like, oh, my phone. And I looked down. I had made $600 in 15 minutes. That's when I was like, all right, bro, fuck all of this. Lock in, bro. Lock in, bro. And so trading's real, the money's real, the opportunities are real, but the volatility is also real. And I'm here on these charts every day for at least an hour or two to be able to make that $200. So yes, I made the $200 in 2 hours or less, but it also took me 2 hours of preparation, and I don't even know how much studying. I'm not saying it has to be hard. I'm just saying you have to do your due diligence in order to understand what you're doing. And once you do, every ounce of it is completely worth it. And then I also gave myself a report card for today. And so I took screenshots of every single trade that I took, the entries, the exits, where they ended up going to ultimately, the price the stock was at when I did it, all of that good shit. And so my profitability was an A minus because I ultimately hit within $10 of my goal. I actually was at 186. I had been at 190, but that's where my risk control gets a B plus because I took another play after I hit 190 and was $10 away from my goal, right? And then I get an execution because I accidentally took a put. There's no reason to accidentally buy anything. You feel me? This is real life capital and it's live in the market. There was no reason that I lost money today. So this would have been $210 easily. But my first trade, I lost $25 because I just wasn't paying attention. I thought I had a call, I had a put. And then for my exits, it's a C minus because every single contract that I sold today, at one point in time, within 10 to 30 minutes of me buying it, was 100%. Let that sink in. Every trade that I made today went 100% or higher. I just didn't hold long enough to see it through. And that's also why my process quality is a C plus, because I cheated myself. And it says right here, good instincts needs a tighter pre-trade checklist because I get out of trades too soon. How I told you I can see the continuation, I won't hold it for that whole continuation. I wasn't even playing this no more. I had already bought in and sold out. If I would have bought in and stayed in, I could have made 3 times as much money. You feel me? I don't get mad at myself for it because I like protecting capital, but I also have to be aware of where I'm limiting myself. And right now, my biggest limiting factor is sold my strong winners too early. You feel me? I could have had twice as much as this, 3 times as much as this off of one play if I just held a little bit longer. And so, yeah, what worked is I have a great eye for relative strength and weakness. I can see all my levels and I move quick. I move quick on the right stocks at the right time with all the news that's going on. But sometimes I sell out way too early and I manage my exits based on the chart. I mean, not on the chart. Sometimes I manage my exits based off of the movement and the price value of my contract as opposed to the chart and what I know is possible. So tomorrow, we're not going to sell out too early and we're not going to buy anything by accident. This should all be at least B's tomorrow. But look, risk control, a B plus, that's something that takes time. Trade selection, B plus, come on now. And profitability, an A minus, I'll take it. Seeing a 78 makes my balls itch. I'd much rather see an 80, but it is what it is. Tomorrow will be better. So again, let's see. Anything else to go over? Nah. You got questions, comments, or concerns, let them be known. If not, I'll see you in the morning.